Hello, my name is Mark Schneider. I am responsible for investor relations at DEUTZ AG, and I'm happy to present you our H1 2024 figures. That's the typical disclaimer. DEUTZ AG shows once again resilience in a downturn environment, which is characterized by weak demand from core customer industries. What does it mean in detail? We have new orders of 791 million euros. That's an overall minus 18% on prior year period, and that's due to weak orders, particularly from construction and agriculture. But that is mitigated by increased service orders. That's a plus of 6.5%. So service is one factor that makes us more resilient than in former years. Our revenue, that is 876 million euros. That's a minus of 12.6% in comparison to the prior year period. Hence, significant less than decline in unit sales, which is 18.9%. The revenue share of service business is up 5.2 percentage points to around 29%. Our EBIT margin is quite robust with 5.7%. So that shows the improved resilience against the economic environment, and the margin, we will come to that later, is well in line with our guidance. Our core markets currently are still a mixed bag. We are caught in the cycle. The US show strength once again. If we come to the segments, construction is down 28%, agriculture is down 32%, material handling, that's very robust, even growing, is plus 9%. That's especially linked to the US market. And I already mentioned the service growth of 6%. If we come to the regions, Europe is in the down cycle, minus 19%, but the US, and that's especially true for the material handling business, shows a plus of 2%. China is a minus 20%, and APAC, excluding China, is minus 11%. So Europe and the agriculture construction segments are still on the cyclical low. US and material handling once again growing. When it comes to profitability, we very robust despite the cyclical decline in revenue. It's a 5.3% adjusted EBIT margin, and that's well in the corridor of our guidance of 5 to 6.5%. We also can see the revenue here, and that shows, it's not the level we would like to be, but I think shows the robustness despite a very tough environment, and shows also that our performance initiatives and the expansion of the service business stabilize our business. What do we do in terms of cost reduction and avoidance program? We have procurement program. We are well on track here. That's 150 measures which we want to realize in H1. We have realized more than 50% savings, very concrete. That means that claims of around 30 million euros for our suppliers are rejected in the first 6 months of the year, and that's a pushback ratio of 90%. We also try to realize indirect spend savings, and we have around 70% realized yet, and that's more than initially identified, and that almost compensates the volume-related reduction in direct materials. There are news from the production side. We have a new flexibility in terms of volume and engine variance. We've opened a new flexible production system called Band 6 in April, and that allows us to respond to the changing market requirements more efficiently. It's equipped for full production for our large 4 to 8 liter diesel and hydrogen engines, and we started the serial production of our hydrogen engine in September, and that is built on this Band 6, and we have invested around 50 million euro for this production facility. I would like to give you an update on our recent strategic moves along our Dual Plus strategy, and the idea is that they strengthen our growth and resilience. We have already closed the acquisition of Blue Star Power Systems, which we have acquired in June this year. Then we have signed a partnership with Indian production company Tata in July. It's a strategic cooperation with Tata Motors. And we have closed on August the 1st the transaction with Rolls-Royce Power Systems. So from now on, we supply the Daimler medium duty and heavy duty engines for the off-highway business. These new medium and heavy engines have very interesting customers. So the Daimler Truck partnership opens us new markets and new customers. You can see 3 examples here. We have the mining and construction company Bell from South Africa. We have the German agricultural manufacturer Klaas, and we have the Finnish company Pons with very different applications in complex environments, and you can see advantages of the internal combustion engines here, and we're very happy to supply these new customers. Here you can see details of our results. I was already talking about the order situation going down, the unit sales and the revenue. That also relates in a book-to-bill ratio at 0.9. And what we try to do quite successfully is to compensate the decrease in unit sales by the growing service business revenues and market-orientated pricing. The program was performed last year, but is still in place. So we see the pricing level still high, and that leads to a less pronounced decline in revenue. Profitability remains within the guidance range. And I would also inform you about a different topic, which is our successful capital increase in July. We have 12.6 million new shares. We placed them at a price of 5.71 euros each share, and that results in gross proceeds of 72 million, which we could place in a difficult market environment, and that helps us to finance the acquisition of Blue Star Power Systems and the transaction with Rolls-Royce Power Systems. When it comes to our guidance for this year, we underline our revenue target of 1.9 billion to 2.1 billion euros. We are still expecting an adjusted EBIT margin of 5 to 6.5% and also a free cash flow mid-double-digit million euro amount. What has changed is that we are now expecting best case unit sales of 160,000 engines, and previously we were expecting 160,000 engines to 180,000. Last but not least, I would like to inform you about our medium-term targets. We confirm them. That's a revenue of more than 2.5 billion euros, service business share of revenue approximately around 600 million euros, and adjusted EBIT margin from 6 to 7%. So just to sum it up, we have a mixed picture in a difficult economic environment. DEUTZ shows a new resilience. It helps us that we have de-invested the Torqeedo business. It helps us that we have our strategic milestones, that we could close the Rolls-Royce Power Systems deal, that we could acquire Blue Star Power Systems, decentralized energy business in the US. And that helps us when we come to the second half of the year. We confirm our guidance. Only the unit sales will be in best case at the lower end of the former range. And I think with that, we have a good foundation for the rest of the year. Finally, I would like to invite you to our Capital Markets Day. Please save the date. It's October 8th, Cologne, our headquarters, and I would love to see you there. Thank you.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.